And good morning, welcome back to NeelyFX. My name is Michael Neely, and this is the channel where we talk about foreign exchange trading, prop firm trading, and hopefully making money doing all those things. Welcome back to my daily Forex update and trade review for Friday, March the 6th. It's the first Friday of the month, and you know what that means. Non-farm payroll report comes out today about 8:30, so we'll see what that does with the financial markets. It's probably the most influential report of the in the financial trading universe. But first, there is risk, and let's talk about risk disclosure. First, here we go. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. And first, let's go ahead and get into what's going on today. Here we have, how am I doing on this challenge? Well, I'm over $2,500, and I thought I checked out. Thought I would be out of there, but no, I'm not. Looked back into it, and they're getting better about updating their records on their end. I have a max daily loss of 7.5%, which is $2,000, and a max loss of $4,500. So keep getting there. We want to turn that around and turn this over on this end. As you can see, I've passed everything but the profit target, which I'm going the wrong direction on. I'm supposed to be plus $3,000. I'm almost minus $3,000, which is not good. So I'm an experienced trader, and I'm still losing money right now because I'm trying to force trades. I think that's the main thing I'm trying to do right now, is just trying to force trades and get things done. But anyway, here's the NFP stuff we have for today. We have non-farm payrolls and everything that goes along with it. Let's go back to a couple of days ago. ADP report. ADP report change shows a very positive growth in non-farm employment change. It's the private sector measure of it, and here's the government measure of it. We're up against 58,000 jobs. That's kind of a softball number. Employment rate depends on participation rate, and that's been really a nothing burger lately. Mathematically, it depends on how many people are actively looking for jobs, and if you have half the population not looking for jobs, then you have artificial spikes in unemployment from a mathematical standpoint. So I don't really trust the employment rate anymore. I used to pay attention to it. I don't even pay attention to it anymore. Because what I do pay attention to is what the rest of the market is doing. Here is the risk on, risk off meter at baby pips. I highly recommend checking that out if you haven't. And here are our support, how we calculate our support and resistance levels for today, depending on which measure we're going to use. And lastly, the currency strengthometer. US dollars right in the middle, right above the British pound. And look at that, euros right down here. And Japanese yen is right there, so we should see a spike in a couple things. Let's get into the charts and see what we've got here. First, on the DXY, we've got this is the measure of the dollar strength based on six different currencies. The euro being the biggest. How does it work mathematically? I've never seen the formula, so I don't know. So here we go. We're right at the top of this trading range. So we could see a sell-off today, could see a breakout. I doubt, if we have 200,000 jobs against a expectation of 58,000, then we could see a breakout. I don't see that many jobs being created, but who knows? We could have something pulled magic with the rabbit out of the hat. Let's go down to euro versus Great British Pound. It is. Looks like the Great British Pound is winning today. So with that, let's go on. That is not something I trade, but it's something I probably could consider trading one of these days. EG. Let's see, the euro versus the dollar. Strength of the dollar means we're going to have weakness in the euro versus the dollar because the dollar is, the euro is 57% of the DXY component. So with that, we'll go on to the dollar versus the yen. And it is kind of stalled out right there, just shy of 158, as it does before a turnaround. So we've got lots of breaks on this. None of them successful. So this might be a good time to get under the US dollar, to get under the UJ, as we call it, the dollar versus the yen. At this point, it's kind of a statistical kind of thing. You can kind of look at it and say, how many times has it gone out and go with a buy stop? Around 156, 100 pips down. That's not going to work. Go to the 4 hour. See what we've got. Is this worthy of a trade? Need to see an indicator, and we have RSI at 61, ATR down, and no, I don't see the trade here. Too many indicators telling me that everything's too strong right now. That could change in the next few hours as we get closer to NFPs. The NFP release at 8:30 New York time. Kind of treacherous to trade. I wouldn't trade it half an hour before, half an hour after, 15 minutes before, 15 minutes after. Would probably be mine. Half an hour is a little bit too fast in today's world. It's a little bit too long in today's world. Let's see, 15 minutes, more so. The big guys usually place their bets by then. Pound versus the dollar, or reacted to the strongly reacted to the whatever happened. Again, down, but not necessarily falling apart. But it's not really going anywhere real fast either. 133.36, kind of stalling out again right there at the 133.30 level. Here's the thorn in my side. Pound versus the yen. Love to trade it, but I can't figure it out. To put it bluntly, you are going to. It's going to be a learning curve to trade this thing. It is jumpy, and you want to come in with a lot of room, or else you're going to get chewed up. My last trades, my stop losses were too shallow, and I got stopped out. And now I would have a profit on those trades, a fairly sizable profit, but I got stopped out when it dropped down to here and then bounced. So this thing is bouncy. And you probably want to set your stop loss around 209, about 150 pip stop loss if you can stomach that. Because this one is, the ATR on this is, what's it right now? ATR is at 168 pips. It's what it typically trades in a day right now. Well, let's look at this one. This one, it was 166. So the past week it's been trading about 150 pips, 160 pips a day for range. So you want to give yourself probably a 200 pip stop on that. It's just crazy. I probably shouldn't be trading that one at all. Let's see, euro versus the Japanese yen. Again, there's no carry trade breaking down, but it's still not really going gangbusters against the yen. UCAD, nope. It's just not going anywhere. If you could get in on like the 15-minute range and maybe throw a mean reversion strategy on it. Let's see what that looks like. 15 minutes. Let's see if we can see some mean reversion activity going on inside the Bollinger Bands. Got it right there. Don't have it clearly right there, but it's would be something where you would want to investigate it. So on the 15-minute chart, you've got plenty of reason to get into this. But what you'd be looking for is a red candle close below and then a green candle close above and then get in. Of course, this one you would have to possibly get stopped out before coming back in. So this one is, again, very, very jumpy, but it's then it close up there and then close above the greenish and then get a buy stop going in right before at 166.55. Then you could have a sizable trade. But you would That's an interesting way to do that. I think I have to look and see how I programmed my my program on that. I've got a program that'll trade that. It's not in Trading View. It's in MT4. I can put it in Trading View and see what happens from there. Who knows? Let's find out a little bit later. CAD versus the yen. Let's get back into the dollar, the daily trade. So I'm also getting ideas right now too of trading programs. All right, so here we've got a very clear mean reversion strategy going on here that would work beautifully. Tell you exactly when it's going to run again. Not exactly, but it's pretty good. One, got this level right here, 112.16, which is the January 2026 daily low close, and that's seems to be a very prominent support number for the CAD yen. So if you trade the CAD yen, right now it's approaching an all-time high at 155, 115.56, which is being driven by the oil market. Look at oil go. It's taken off because of the tensions, let's call it, in the Middle East. As we are doing some people are doing some things in the Middle East right now, to quote Elon Omar. Let's see. We have the it's up because of the Iran thing that's going on right now. Let's see. Aussie versus the dollar. So this would be great. Again, hindsight being 2020, you'd have to get into it before we started bombing Iran, and that would have been a beautiful trade. I don't trade futures, so I did not get into that. Okay, Aussie versus the dollar right here. Getting below the starting to get below the 2026 weekly high close. So it's starting to come down a little bit. I think this may have some more room to fall too. 700. So we're looking at dropping possibly down to 66. That's a fair bet right there too, considering we just cut off China's oil supply. Gold. Let's look at gold. Gold is starting to come down too. Interesting. So oil is going up, gold is going down. Gold is going down on, because it's going down. $5,000 gold is kind of hard to maintain, but we'll see what happens with that. Platinum, again, coming down a little bit. Palladium coming down, and silver. 82. I love silver. I love me some silver, but it's not doing very well right now. It's when I started buying it when silver was trading at 16. It's doing great, but it's if you wanted to come into the trade silver today, I would stay out of that. It's the last 3 days are not going anywhere. Oddly enough, the software sector is picking up. Which is kind of interesting. So maybe people are out there creating more software since it's cheaper to create and easier to create software than ever before. So maybe that's what's going on. I don't know, but the software sector is starting to pick up, even though we had massive red in. Oh, okay, it rebounded. It was down 1,100 points yesterday. Nasdaq was down only 73. So things bounced back a little bit yesterday. How about that? But this is interesting that the software sector is starting to pick up again. Again, it could be that now that software is easier to produce on a big level, thanks to AI. That may be the only thing that AI is good for. As a matter of fact, is writing code, which would be great. But anyway, it works for me. That's all I got for today. Again, if you like this video, then by all means hit the like button, hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to talk to me, then hit me up in the comment section. I'll get back with you as soon as I can. But that's all I've got for today. Let's see what NFPs look like, and I'll talk to you later. Bye.